Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 24th of April 2022. Are you panicking? Well, first of all, if you are panicking, then actually you should step out of the markets, because the most important thing you can do for yourself is to calm down and sort out your emotions. If you're panicking, you can make very irrational decisions, okay? And the question we've got to ask ourselves is there cause to panic? Now, obviously, look, like I said, when you're trading, you've got to make sure that you've sized your position right so that there is no reason to panic, because, okay, losses occur, but, you don't want to structure your portfolio in such a way that you can get completely wiped out. That's what causes panics, and it causes irrational decision making. Right, having said that, it was a slightly weird time in the markets this week, wasn't it? So we'll start with the 10-year yield. Now, this was a bit weird because the 10-year yield went up, and which means basically the bond prices went down, and the stock market prices also went down. So this is unusual. Normally, if you get stocks dropping, then that money goes into bonds. But basically the money flowed away from both. And as we'll see a bit later, it looks like most of it seemed to have gone into cash in terms of US dollars, because the dollar index went up. And remember that we'd been looking for quite some time at this chart here with this trend line, and these touches are exact over here, all of these, and you can see here we've gone through that line. So that's important because it hasn't happened for multiple decades. You can see that multiple decades that has held. So obviously something's going on. Now, also the thing we've got to remember is that this is on the monthly scale, and this last bar that hasn't actually closed yet. So only next week will we know if we get a close above the trend line. If we get a close below the trend line, then this thing could still turn down again, just for a while. And if that occurs, it just basically means that the can is being kicked down the road. Whether that happens or not, of course, I don't know, but it's something to watch out for. Right, the US dollar index, as I mentioned. So this is first on the monthly scale, and previously I'd drawn this trend line here, and you can see that we are bang on there over here. We'll zoom in on that in a moment, but this is just to give you that broader view of what I'm looking at. The other trend line I've drawn is just to join these two tops here, so that could give us a slightly higher target. I think that's about 102-ish, that kind of level. And then I've also drawn this support line here, which if you zoom back, you'll see that's been support and resistance here. Certainly here you can see that it was resistance. And you can see that we've breached that there as well. So this is a very important point here. And the question is, are we going to get a reversal along with the US 10-year yield, or are we going to go through there? I think if we go through there, we've got much higher targets ahead there. And so this is zooming in, so this time it's on the weekly scale, and so you can see those three lines that I'd drawn in the previous chart. And you can see just how bang on that has closed there. It's pretty interesting. And remember that we'd drawn these lines a few weeks ago, didn't we? So, it can be helpful. It's not always perfect, but it can give you some guidance, I guess. Right, so gold in US dollars on the daily scale. And we basically, that 2000, it's a psychological level that we're looking at there. And of course, it kind of just stopped shy of that and came back down again. And, this candle's rather large, isn't it? So there seems to be a bit of a push downwards here. Now, the other thing, last week I'd drawn this trend line. That's been broken. So that's clearly of no use to us now. So we'll get rid of that, but we've still got this trend line. Now this is much more of a long-term trend line, and it's joined the lows for a few years now. I think it's about 3-year trend line here. So this isn't a major deal, okay? So it's nothing to get upset about that that's broke, and it's certainly no cause for panic. I think in terms of downside, is there more downside? I think there is a little bit more. And so what are the levels we're looking at? Obviously 1920 over here, we didn't really get a close below, I think it's maybe 1918 or something. You can see here, it's almost like a little shelf over here, isn't it? So I think if we drop below that, then the level we don't want to kind of go below is this one here. This is the low over here. Now remember that was the 0.618 retracement level from the peak here. And so if we break that, then the next level I think we're looking for is down here. I actually don't think we're going to get that far. And I actually don't think we're going to break this level. That's my opinion. I don't know, but that's my feeling here. So yeah, this is this kind of zone that we're looking at. And what we definitely don't want is a break of this trend line, because this is a much longer term trend line here. Obviously, the moves that we've seen are going to shake some people out, and that's what the market wants. It doesn't want to take people along for the ride. And when this thing turns around, it's going to be a big ride, I think, and that's why I'm kind of sticking with it and plugging away. So this is all part of the shakeout. That's what I think. Silver. So with silver, if you remember, we've drawn this as the fib levels here. And I think there's a couple of things that we need to think about with fib levels. So the first one is, where do you start and where do you end? Now, obviously here this was a turning point, because obviously we got a lower high after that. So that looks correct. Is that the correct one? I don't know. I've just put that there intuitively because it hit the trend line and it just seems to look right to me. But honestly, I don't know. I mean, maybe this is the correct one. I don't know. But let's assume that this is correct. Then what we were looking for was a hit of the 0.618, and we didn't quite reach that. And so you'll remember that I commented on that, but I didn't know whether that was important or not. I think it is, looking at the price action now. So you can see that we had a bit of a bounce up and we're coming back down again here. So I think we've got to at least hit that level. So we're looking at 23.90. Now, if that is the case, then we haven't got much of a drop here. But also, I think it's equally possible that we can come down to this trend line here, which is, again, a much longer term trend line covering years. So, yeah, again, this is the important zone where we want to see a turnaround. Now, this I thought we'd look at was the difference between gold and the gold miners. And so as you can see, when gold peaked up here, we had actually thought that the miners had peaked there as well, and you'd think that they'd both drop together, but actually you can see that although there was a drop, this recovered much sooner and actually made a new high, whereas gold stayed kind of flat really down here after the drop and then didn't make a new high before dropping off. And you can see that the drop off for the miners, that's the orange line, is much steeper here. So obviously the miners have outperformed gold up here, but underperformed, well, outperformed, I guess, to the downside, yeah. So this is interesting. And the importance here is when we look at those fib levels, because if you notice before, we'd used this as the peak, but it turns out that was wrong. We actually need to use this as the peak now because it made a new high. So that's why I've redone this, okay? You'll remember that also I'd drawn this trend line up here, And of course that broke. I wasn't anticipating that, but hey. Now, thinking about it, one of the things that you got to remember, which I didn't remember, is that the steeper the trend line, the more likely it's going to be to break. The sooner it's going to break. And so, I mean, when you look at this is pretty steep, isn't it? So probably it was unreasonable of me to think that it's going to keep going up and respecting this line. So we've broken that. So how low can we go? And so again, I think it's useful to use these fib levels. And here it's easy to see where to start it. It's very easy. Okay. So we've already hit bang onto the 38.2. Will it stop there? I mean, yeah, it's possible, but looking at the precious metals as well, I think there is still a little bit more downside here with this. Now, it's possible that it might just bounce up before coming down. We'll have to see, but I've just got a feeling that either the 50% or the 61.8% will have to are more likely to be held. Sorry, I just got distracted there because there's a little colourful parrot looking at me on the fence outside the window. It's very cute. Anyway, sorry, I'm getting distracted here. It's still there. Right, so I think the target, probably the most likely we're looking at is 35.24, and then below that is 33.73. So that's the level I'm looking for. Again, not really, I don't feel like this is something to panic about. Remember, we've had this long-term downtrend which we broke out from quite decisively. And, if it does go as low as this, it just means it's retesting this long-term trend line. And, it will turn up from there. I actually think I don't know, but I think it might turn around a bit sooner than that. Okay, silver priced in US dollars, and this is on the daily scale. And again, I've done the same thing. So I've plotted silver in the bars, and SILJ is in the orange line over here. And again, a similar thing happened. You can see that the peak happened over here for the SILJ, and the peak happened here for silver. And silver didn't make a new high, SILJ did. And again, both dropped off quite dramatically there. And so again, we've got to do a similar thing in terms of the fib level. So I've redone them. Last time we'd done it from here. So, I mean, it doesn't make a huge difference. You can't be too exact about some of these things. You've got to kind of accept ballpark level. So even if we had left it there, okay, you might get, a few points difference here. So at the moment, we're actually pretty close to that 50% level. So potentially we could come to the 12.5 level. I don't think we're going to go much lower than that, though, because, look, we've got some good support over here as well. So, again, just a bit more of a drop before we get a turnaround here. That's what I'm thinking. Obviously, I'm being very positive because I'm bullish in general on the precious metals on the bigger time scales. Right, that's it from me. All the best, and we'll see you next week. Bye.